and welcome to the Day Trading Masterclass, Part 1. Introduction. Hello, my name is David, but you can call me Mr. Wolf. I will be your teacher for this masterclass. Before we begin, at the time of this presentation, I have been a trader and a student of the markets for 5 years now. In this masterclass, this will give you the opportunity to learn from my experience, knowledge, and beliefs as a trader. This is a skill you will learn and have for the rest of your life. By signing up for this masterclass, you are telling me you want to take this seriously. I ask that I receive your full attention, listen to what I have to say, and do not question me. Please hold all questions till the end of the class. You will receive homework at the end of each class, and I expect you all to do as I ask. I am here to help you and guide you in the right direction. Trust in the process. Do not come into this thinking you are going to get rich quick. Nobody has, and nobody ever will. This is going to take time. I lost money consistently for 2.5 years before things started clicking. Everybody learns at different paces. You must put in the work. I can give you all the information and tools, but you must do the work yourself. I cannot do it for you. Over the course of your career, you will have ups and downs, especially in the beginning. Do not give up and do not quit. This is a hard game to learn, but it is very rewarding once things start clicking. You will get aggravated and feel like you will never learn this. You want to embrace your mistakes and errors, learn from them, and continue to improve every day. This course is designed to build off each lesson. We are going to cover everything from getting started as a beginner, what you will need, key subjects to focus on and learn to start a foundation, order types, trading strategies, psychology, emotions, and more. Let's begin. Requirements for day trading: computer and internet, brokerage account, money. Brokers will provide a charting platform that you can download to your desktop or laptop. Some popular retail brokers today: TD Ameritrade, Charles Schwab, E-Trade, TradeStation, Interactive Brokers, Centerpoint Securities, Fidelity, Mobile Brokers, Robinhood, Webull. Every broker is going to have pros and cons, so please investigate each broker, see what they are good at, not good at, and select the best one that fits your needs. PDT rule, pattern day trader. What is a pattern day trader, PDT? A pattern day trader, PDT, is a regulatory designation for those traders or investors that execute 4 or more day trades over the span of 5 business days using a margin account. The number of day trades must constitute more than 6% of the margin account's total trade activity during that 5-day window. If this occurs, the trader's account will be flagged as a PDT by their broker. The PDT designation places certain restrictions on further trading. This designation is put in place to discourage investors from trading excessively. Most brokers will give you a warning, but after that, they will lock up your funds for 90 days. Pattern day traders are required to hold $25,000 in their margin accounts. If the account drops below $25,000, they will be prohibited from making any further day trades until the balance is brought back up. There are ways around the PDT rule. Examples of PDT rule. One pattern day trade is to buy and sell a security in the same business day. You can buy a security, one buy of 1,000 shares, and sell in separate blocks. Sell 250, sell 250, sell 250, sell 250. That still counts as one day trade. If you have 2 separate buys of the same security and one sell, that is one day trade. So buy 500 shares, buy 500 shares equals 1,000 shares. Then you sell one order of 1,000 shares is all right. If you buy more than 2 separate times and sell 2 or more separate times, that counts as multiple day trades. So if you buy 500 shares, then buy another 500 shares, then sell 500 shares, and sell another 500 shares, that is 2 day trades. Other ways around PDT rule. You can have multiple brokers open and funded. So for an example, if you have $6,000, you can open 3 separate brokerage accounts and fund them with $2,000 each and have a total of 9 day trades per week. Swing trading. If you hold a position overnight and sell it the next day after the market opens, you will not have a strike towards you for PDT. Some people look at this as an excuse to hold a position overnight just so they don't use a day trade. This can be a disaster, especially if you are trading small cap stocks. More ways around PDT rule. Offshore broker. I do not recommend opening an offshore broker. This is an option you have if you wanted, and I am only sharing this information with you. Opening an offshore broker is attractive to newer traders looking to get around the PDT rule in the United States. Opening an offshore broker has risk. They can close and take your money, but I do know of some traders that use an offshore broker to get around the PDT rule. Remember, the PDT rule is only in effect for the United States. Opening an offshore broker, you will pay more in fees and commissions, but this is the cost if you want to trade as much as you want if you don't have $25,000 or more for an account to trade. If you do decide to go this route, please do your own research. Some offshore brokers that I know of: CME, Capital Markets Elite Group, Trade Zero, F1 Trade, Cash Account. If you have a cash account, you do not need to worry about PDT rule. You can buy and sell as much as you want. You do have to wait for funds to settle though. They call this the T+2 rule. T+2 means you have to wait 2 business days for funds to settle to trade with those funds again. You do not receive margin with a cash account. You can only buy stocks. You cannot short stocks. When I was starting out as a trader, it used to be the T+3 rule. They recently just lowered it. Cash account example. If you have $5,000 to trade with and you only use $2,500 for that day to trade with, you can buy and sell as much as you want only using the $2,500 you want to use for that day. The next trading day, you still have $2,500 left of your $5,000 to trade with. You must wait until the next trading day to get back your $2,500 to trade with. The T+2 rule. Ticker symbols. What is a ticker symbol? A ticker symbol is an arrangement of characters, usually letters, representing securities listed on an exchange or otherwise traded publicly. When a company issues securities to the public marketplace, it selects an available ticker symbol for its securities that investors and traders use to transact orders. Every listed security has a unique ticker symbol, facilitating the vast array of trade orders that flow through the financial markets every day. History of the ticker symbols in the U.S. Standard & Poor's S&P developed the modern letter-only ticker symbols in the U.S. The standardized investing previously, a single company could have numerous ticker symbols among different individual stock markets. The term ticker refers to the noise made by the ticker tape machines, which were once widespread in use, but now have largely been replaced by various types of electronic digital tickers. Each stock market has a formatting convention for the issuance of tickers specific to that stock market. Ticker symbol basics. Stock or equity symbols are the most known type of ticker symbol. Stocks listed and traded on the U.S. exchanges such as the New York Stock Exchange, NYSE, have ticker symbols with up to 3 letters. NASDAQ stocks have 4 letters, ticker symbols. The ticker symbol provides a unique identifier by which individual securities can be researched and traded. While the ticker symbol is most commonly an abbreviation of the associated company's name, it is not a requirement. Availability may prevent a company from selecting a symbol that easily translates to its name. Ticker symbols followed by E or LF. When a ticker symbol contains the letter E on the NASDAQ stock market or an LF on the NYSE, this indicates the company associated with the stock has fallen behind on its reporting obligations to the Securities and Exchange Commission, SEC. The associated letters add to the end of the company's normal ticker symbol. Often companies have a set grace period to complete their reporting requirements once the requirement is met. The extra letter are removed if the reporting requirement is not met before the end of the grace period. The security may be removed from the trading or delisted. A Q at the end of a stock symbol means the company that issues the stock is in process of bankruptcy. Candlestick charts. Homework. We are not going to get into detail about candlestick charts. New people, this is going to be your homework. Remember, I can give you the tools and guide you, but you must put the work in. On my YouTube page, I have a Japanese candlestick playlist with a total of 9 videos I want you to watch. You have 1 month until our next class to watch 9 videos. That is almost 4 hours of additional lessons. These videos will help you understand the different types of candlesticks, candlestick patterns, candlestick charts. Learning how to read and understand candlesticks is very important because with candlesticks, you can see the emotions of other traders and how the stock is trading. I can't tell you how many hints candlesticks reveal when I am trading a stock. Pay attention to details. When I first started learning and trading, learning about candlesticks is a great area to start learning. This is where I first started on my journey, and I want to lay out my path for you all to follow. I was eager and excited to learn. I went out and got flashcards of candlesticks, and while I was on lunch at work, I would blow through the flashcards so they would stick in my head. I would also do this before bed. I was determined and had a feeling inside I never felt before. I enjoyed learning and studying about the stock market and day trading so much. If you are in this just for the money, you will have a hard time learning and wanting to put in the work to get better. You honestly must have a passion for this and willingly sit for hours studying, looking at charts, learning from mistakes, and adapting as a trader. To me, this is not work. This is a passion for trading. So if you are looking to make easy money or fast cash as a new trader and think you will just walk in, learn in a few months to 1 year, good luck. You are going up against some of the smartest people in the world and computers that are only getting better and faster. You cannot rush this. Accept the journey and process of becoming a consistent and profitable trader. Hard work, sacrifice, dedication will pay off down the road. It did for me. Don't quit. And this is the end of class 1. Stay tuned for class 2.